Looks like we're live. Bam. Welcome back to Game Trader Live. I'm Asif Khan, CEO, Editor-in-Chief here at Shacknews. Also EIEIO, which if you're wondering what that stands for, it stands for Extremely Intelligent Extreme Intelligence Officer. And yeah, it's made up, but so is most of AI right now. Anyway, we're going to look at stock charts because this is the end of the quarter, heading into the fourth quarter, a quarter during which the presidential election will begin. Maybe we'll get the results this quarter, but at the very least, we know we have a catalyst for the stock market to move coming up pretty rapidly here. So yeah, I want to look at a bunch of stocks, looking at their longer term charts, seeing if we can find any information that would be useful going into this fourth quarter, which I mentioned, might be a volatile one. So let's take a look here at the charts. You'll see me in the bottom right or bottom left, whatever. I'm here. So yeah, I have Apple's chart first. We're looking at a stock that hit an all-time high during the last quarter. I don't know. Should I move the camera over here? Yeah, I think that's probably better. There we go. Yeah, I don't really find the stock to be that compelling here, from an investing standpoint. You're talking about a company that's barely growing earnings, is trading at 35 times earnings. That's the price to earnings multiple. But yeah, you had an outside. This is a good example of what the power of an outside bar. So you had an outside bar, followed by an inside bar, followed by an outside bar breaking out to the upside, and you had continuation. So, if you bought this breakout above 196.38 you could have made a decent amount of money. Maybe over a 10% return in a few quarters, which is not bad at all. But this is not just a technical analysis show. I look at things from a fundamental perspective also, and also just from a consumer standpoint. I don't know if Apple has made a compelling case for their products this year. At least the iPhone. That remains to be seen, though. On the daily chart, Bill's editing my article for me. Appreciate it. Daily chart is trying to hit an all-time high. Has not since July, when it hit 237. Or sorry, yeah, July 15th it hit 237.23 It has not hit a higher high yet. So the chance of this stock rolling over, I'd say, is pretty high. Obviously, at an outside bar to the upside on the yearly chart. So this isn't a chart that you want to fight, because it does have the longer dated time frames are on its side. So I don't see any evidence that I would want to short this from a technical perspective at all. But it's possible that, let's say we do get a breakout above this previous all-time high, this stock could go higher. I wouldn't say it's outside the realm of possibility. I just look at things, what's going on with Vision Pro, the fact that they didn't ship Apple Intelligence with the iPhones yet, and we don't. It seems like Apple Intelligence is kind of half-baked. They may back out of their OpenAI investment. That was a rumor that was going on this weekend. So yeah, not a whole lot to tell you on the quarterly chart here, other than this is a good example of what happens when you do buy a breakout above an inside bar, and it's as easy as that because you had full time frame continuity when that happened. Stock was up on the month, stock was up on the week, stock was up on the day, right? And stock was up on the quarter, right? So when you have full time frame continuity, you don't want to fight it, even if you have fundamental reasons to not want to own a stock. Not wanting to own it doesn't mean I would short it, but in this case, I just don't know how much Apple has left in the tank. It's around a $3.5 trillion market cap. If the markets do go down, Apple will go down, as it's part of every index now. It's part of the Dow Jones. It's part of S&P 500. It's part of the NASDAQ 100. So even if you're an individual investor who doesn't invest in individual stocks, you own Apple. If you own an ETF for the S&P 500, or if you own a mutual fund in your 401k that's supposed to mimic the stock market, or you own a growth fund. For some reason, a lot of growth funds still own Apple, even though Apple's largely stopped growing. It used to grow, I guess, is one reason to keep it there. But yeah, I guess all I'm saying is I would be cautious staying long Apple here. I do own shares in my own accounts, but at much lower levels. And I'm not telling people to buy it today. But, you know, like I said, I don't see a reason to sell it on the chart yet. Other than I just don't think I think iPhone in year, what are we in? Year 17? I just don't, it's not that I think the product's going to die or anything. I still think it's like the most important product that they make. And I obviously upgraded to the 16 Pro this year because I had a 14 Pro and my battery sucked. But largely, I think the iPhone and smartphones in general are becoming commoditized, which is not unlike what we saw with the iPod. But back when Apple saw the iPod sales slowing, they had the iPhone in their back pocket. So I'm not really sure what we're supposed to be seeing from Apple here, because Vision Pro was not it, and I don't think the Mac by itself can carry the company. See, AMD, here's an interesting quarterly chart. I noticed this last night when I actually prepared for this week's episode, you guys. Are you proud of me? Tell me you're proud of me. But yeah, we have a potential reversal to the upside here in AMD. Hit an all-time high in the second quarter of the year. Or sorry, that was the first quarter of the year. It hit an all-time high of 227.30. Traded inside of that range because the low of that quarter was 133.74. Trade inside of that range in the second quarter of the year. And then we saw the larger semiconductor industry had a breakdown earlier in the year, but it did come back within this inside bars range. So this is not a reversal strategy yet, but if this stock gets above 187.28 between now and the end of the year, you would have a buy signal on the quarterly chart that would reconfirm you're up on the year, which is a inside year and up buy signal above 151.05. So yeah, you could buy this stock on a breakout above 187.28 and use that as your stop, because that's the buy signal. So if it drops back inside of this, we don't want to be a part of that. But this is a stock that I'm going to be keeping an eye on into the end of the year, because we actually have a signal that might actually matter. You had an outside quarter in Amazon. Stock hit an all-time high. When was that? On July 12th of 201.20. We are now looking at a stock, it's trading at 185. It's sold off a little, I believe, on earnings. And now, yeah, we have an outside quarter. So to the downside, we want to watch a break below 151.61. And for a buy signal, we want to watch for a break out above 201.20. Amazon's also a behemoth of a company. It's, believe it's trading at like, I don't know. It's never been the right way to analyze Amazon by looking at a price to earnings multiple. But yeah, you're talking about an almost $2 trillion company at its current market capitalization. Trades at 44 times earnings, which is rather high for a company of its size. The forward PE is only 31, which is actually the cheapest it's ever traded looking forward at the company. 3.3 times sales. It is trading at a premium to its growth rate, so the PEG ratio is like 1.8. But I just think, they've kind of reached escape velocity at Amazon, because they're pretty big, and I don't see people shifting away from their e-commerce solutions. Also, like AWS is a powerhouse. They basically run the entire internet right now. And yeah, they have other stuff like Prime Video and Twitch. I find Amazon to be more interesting than most of those super large mega caps. But if we are experiencing economic weakness, Amazon's going to be one of the first to show it, as it is largely a consumer stock. But yeah, nothing real. So yeah, we have an outside bar on the quarter in Amazon, and yeah, has not really been able to stay inside. But yeah, we had a 2 up in the last year. So yeah, let's go to ARM. ARM, not really a whole lot to say there on the quarterly chart. It is up a lot on the year, so we are going to be watching for any kind of confirmation of that. It hasn't been trading for very long at all. So yeah, you had an inside week, potential ref strat down, so you want to watch below 139.72 on the week. I just think they're an interesting stock to watch. I don't really have anything else to say. Bank of America. Let's see how they're doing. Not gonna go crazy about that. Let's see. What else should we look at? Disney's an interesting one. Could not get back inside that range for a reversal strategy, I don't think. Well, where did it close this? Yeah, it closed the quarter slightly below that. So you did have an inside quarter and down sell signal. So if you sold below 98.38 and covered at, or took your gains at 83.91, that was a decent sell signal. But the stock did bottom with an inside week. This is why we look at multiple time frames, by the way. But yeah, it's an interesting one. Electronic Arts, close to closing within a reversal, but no cigar. You did have an inside quarter and down sell signal that was active for like a few weeks. But like a lot of these charts I'm showing you, there was a sell-off during the quarter, and a lot of them tried to claw back some of those losses. Speaking of losses, here's GameStop. GameStop is still trading inside of the range that was created in May this year. The low was 1070 and the high was 64.83. They issued another 20 million shares last week, diluting shareholders again. So we have an inside quarter. This is that big ass quarter we were talking about, 995 low, 64.83 high. This last quarter, the low was 1873, the high was 29.79. So you want to watch for a breakout above that 29.79 level. That would be a buy signal on the quarterly chart, and that would also, you would already be a buy signal on that RevStrat year. It would just be reconfirmed above those prices. If you want to short this stock, which I really wouldn't recommend, but if you want to short this stock, below 1873 would be your sell signal, and these quarterly signals are going to be valid throughout the entire rest of this year. So the next 3 months, which is why I think this episode's actually more interesting than last month, because now we can actually look for quarterly signals, especially ahead of an election, which I think is going to create some volatility. But yeah, that's GameStop. Google's outside quarter, so it's not unlike that Amazon chart we looked at. So you want to break out above 191.75 and a break down below. Above 191.75 would be a buy signal. Below 147.21 would be a sell signal, and this would be valid between now and the end of the year. I think Google's actively killing themselves, and at this point, I want to zoom out. This is the full chart of Google throughout its entire existence. And the last time we saw an outside quarter like this, the stock really did sell off a lot. It fell from 151 down to 83 in a matter of a year. So we'll see. That big red outside bar for the quarter does not inspire much confidence in me. So yeah, I would guess that we're more likely to break down, but I'm not trying to predict anything here. My analysis of the company has me leaning towards shorting this versus owning it here. Because, like I said, I think they're in the crosshairs of regulators, the AI companies, and for the first time in a while, it seems like their search engine has competition at the same time that their search engine is getting worse. But it did try to recoup some of the losses for the quarter to end the month green. It's green on the year. Inside year and up is still active above above 142 and 68 cents. So really, if things are going to get ugly here, we want it to drop back below 142 68, because then it sets up a potential reversal into the end of this year, into the beginning of next year. I would say that I think Google is the most, you know, so I'm not super bullish on things, if you can't tell. It's not that I'm like, hey, I'm gonna raise 100% cash and hide it in my pillowcases or bury it in my backyard. I'm not that bearish, but I'm concerned just because I don't see a whole lot of deals out there. And Apple and Google are the two that I think are more interesting to enter from a short perspective. But like I said, I'm still waiting for like the actual signal to do so. But I guess I'm just gonna. There will be a theme of cautiousness between now and the end of the year. So yeah, Google. I'm definitely leaning towards entering a short position, either shorting shares outright or buying put options in the stock. There's a lot of long dated. Hold on a second. Just want to make sure I don't dox myself here. Yeah. There's a lot of long dated options that are available for stocks now. So like, let's yeah, you can buy call and put options out to January 15th, 27. So in the case of Apple, let's see. Yeah, they're trading January 15th, 2027 expiration options. So if I am going to put on some sort of bearish positions, I would be buying longer dated put options. And I'm not really sure. My strike prices would kind of be determined by charts. So right now we don't have like the craziest downtrend here, based on this outside bar in Google for the quarter. But if things get worse, where could this thing go? We already said that it's been in the 80s. Just a few years ago, the stock was trading below 100. So when I see a stock that has like potential 30% downside, I get a little concerned. So yeah, I'm not saying the sky's falling yet, but I am just warning people that stocks don't always go up forever, contrary to what a lot of people think. And all these stocks I'm mentioning outside of GameStop, Apple, AMD, Google, these are in a lot of index funds. So people own these things, even if indirectly. So when a stock like that drops 30%, that has a negative impact on the entire sector it's in and the entire index it's in, and so on. Google. You know who's eating everyone's lunch right now, and it's kind of crazy? Meta. Meta just didn't know. This just 1, 2, 3, 4, 5, 6 consecutive quarters. The stock is just going up, and Mark Zuckerberg is dumping stock as fast as he can. Let's see if I can pull up his numbers. Yeah, Mark Zuckerberg. Let's see when was last. Yeah, he's been selling. He actually hasn't sold at all in September, but he might be in a lockup period. But yeah, he's sold millions and millions of shares this year. And the last time he did that, the stock did crash the year later. Maybe he's just saving up for a special billionaire bunker in Hawaii or something. And hey, thank you for the follow. Uh, Zyro? I don't know. Tell me if I said that correctly. But I appreciate the follow. You can follow us on all these places that are above my head too. There's vertical videos for you there. Yeah, but Meta's eating everyone's lunch. I think Elon Musk has kind of handed Meta the internet. Beansy. My bad. My bad, Beansy. Appreciate you, though. Yeah, Meta's kind of killing it this year. I don't know what else to say. Their Oculus, I always call it Oculus Connect. Their Meta Connect in Palo Alto last week, Zuckerberg showed off this. Obviously, they have the $300 Oculus Quest. I keep calling it Oculus Meta Quest 3S, but they also showed off this Orion augmented reality transparent glasses with like a projector on it, sort of thing. And it just seems cool. Like I like what Facebook's doing when it comes to how they're putting AI into their products, but also what that kind of product would mean for content creation, but also for accessibility. Uh, so I think Facebook's actually making more interesting products than Apple right now. But neither of those companies, I don't know anyone who's going to make money on these products. You know, Facebook has famously been losing money on their Reality Labs division for years. And Apple won't even disclose the profit and loss of Apple Vision Pro. So, yeah, I guess we would just. I'm not saying anything like, oh, gee, buy Meta here because it's really high up here. But when I compare it to a lot of these other companies in its industry, uh, advertising money is going to Facebook and Instagram and WhatsApp, away from Twitter, unless you're like Tommy Chong and you want to sell gummies on Twitter. I think those are doing pretty well. But outside of that, I think that Elon Musk has handed over the display ad industry to Facebook, and simultaneously Google is giving them more traffic as well. So I'm not a buyer of Meta here because, like I said, it's up 7 consecutive quarters. But when things do settle down, if there is a market sell-off, I think people might want to put this on their shopping list. And for like anyone who's if you're like a longtime follower or listener of mine, or if you've been on, follow me on Twitter, or you've heard me talk about this on our Shacknews chatty, like I am not a fan of Facebook, but I'm also able to look at it objectively and be like, yeah, there's like 3 billion people there. They don't seem to want to leave. And the internet's getting worse by the day. Search results are getting worse on Google because they've shoehorned in their AI search. And the veracity of information on Twitter has become almost impossible to fact check. And I'm not saying that any of those things are better on Facebook. I just think that they're leading people to use Facebook products. So I've always said that if the daily active users and the monthly active users roll over for Facebook, that's when you get bearish. That has not happened. They've kind of flatlined in a lot of places, but because it's now a function of how many people on Earth can you get high speed or internet or mobile internet in their places. So yeah, I just think Facebook's an interesting stock, which is a change of heart for me because I've hated them for a long time. Sorry, Meta. Remember when they pivoted to being a metaverse company? How'd that go? Microsoft. Microsoft also. Yeah, also outside quarter. So you have a buy signal above last quarter's high of 468.35 and a sell signal below 385.58. I don't feel either way about Microsoft. So when we look at these big tech companies, um, I think Microsoft's going to be spending a lot of money on AI investment over the next few years, and they said it could take them 15 years to actually realize any gains from it. So you're talking about, $3 trillion company spending $30 billion a year on this AI stuff without really monetizing it yet. There's a chance that this stock goes down in the next year or two. But I'm not of the opinion like, oh man, they're a bad stock, you should short them. Like, they basically have de facto monopolies in certain products like Windows, uh, I don't know, Zune. So yeah, I wouldn't. I'm not super excited about trying to short this thing, but I think what we're seeing is that there are signs that some of these tech companies could roll over with these outside quarters that you saw in, let's say it was Amazon, Google, and Microsoft all have outside quarters. Apple did not. Apple had an outside quarter the previous quarter and then broke out above that. Uh, yeah, so not everything's equal when it comes to these. Let's take a look at Nintendo. It's trying to get out of this. We're stuck in the 2020 yearly chart bar. I don't know. Come back when the Switch 2 gets announced. I don't think there's really a whole lot to say here. It did trade outside quarter, barely. So you would have a buy signal above 14.27 a share and a sell signal below 11.36 a share. That's on the quarterly chart. Traded inside month, because the previous month we had that panic in Japan where the entire Japanese market crashed. Nintendo really did come back and made up most of those losses. But so if you want a monthly buy and sell range, you would be selling this stock below 13.10 a share, and it would be a buy on the monthly chart above 13.90 a share. So that's interesting. I own it, full disclosure. I also own this stock, Nvidia, in some of my accounts. I don't own it in all of them. You had an inside month for Nvidia. But yeah, let's look at the quarterly chart. Inside quarter. So Nvidia would be a sell below $90.69 for the entire quarter, and it would be a buy above 136 and 15 cents. We're obviously closer to that high end, about $15 away right now. So that would be a buy signal if it gets above 136.15, and that would be valid for the entire quarter. That's why we're doing this today, is that today is the end of the quarter, and it's going to provide us with some guidance for what to look at going into the end of the year. So yeah, that's a big one though. I think Nvidia is the most compelling stock in tech right now. If, like, with the caveat that if AI spending continues at the pace that it is, and these training algorithms require more compute, I think Nvidia stands to benefit more than almost any other company on earth. It's like selling pickaxes during the gold rush. They're not as exposed to building these LLMs and these things as their customers are, but they are exposed in that if their customers start rolling over or giving up, then Nvidia stock will crash. I just don't think we're there yet. And I really do wonder if the singularity is a self-fulfilling prophecy. Like, technology companies are going to keep spending on AI because that's what the prophecy foretold. So yeah, I think Nvidia is interesting because they win in most scenarios. And yeah, it's up on the year, so you really want to look for things that confirm that the yearly buy signal. inside month. So above 127.67 would be a buy, and below $100.95 would be a sell on the monthly signal. So that would be valid through the month of October. Yeah, I'm not really looking at these weekly charts as much. You did have an inside week and up last week, and now we're trading inside of the previous week right now. So you want to watch for a breakout above that 127.67 area as well there. Oh yeah, we should probably look at this stock. Tesla. Let's see what Tesla's looking like on the quarter. Tesla's up on the quarter. How about that? Oh man, my green tea's like perfect temperature right now. I love it. Nothing better. Yeah, Tesla's up on the quarter. Still trading. I don't know. It's been in hell for like 2 years. You had a hammer up buy signal, still trading in that range. On the year, it's still trading inside year, which is interesting. So there would be some momentum that comes in if the stock gets above 299.29, which was last year's high. But it's all entirely possible it'll just drop back in within this range. We can look at some shorter term charts on this because we do have a catalyst coming up. Not Battery Day. The Robotaxi event is in October. So we want to see, like, okay, where can this thing go? We had an established downtrend that has apparently been broken in the last month. So we're just going to have to watch. I don't really have there's no real signals here. We just know that there was a downtrend. We know it's trying to break out above that downtrend. And we'll see if he succeeds or not. I have a feeling that the Robotaxi could be a sell the news event, where people buy the hype, and then sell it on the news. But I'll say this. If Tesla by some miracle shows off like a good Robotaxi, like an actually compelling product that would work, the stock could go higher. But how often has Elon actually hit any of his targets internally? So we'll see. And my whole thing is like, can the thing turn left in pouring rain at Shibuya Crossing in Tokyo? If you can do that, then I will say that you have created a autonomous vehicle. But until that happens, I just, let me see if I can, here we go. That that if Elon Musk can make a cyber vehicle or whatever, that a robotaxi, if Elon Musk can make a robotaxi that can turn left here with pedestrians in pouring rain, I will say buy Tesla stock. Until he does that, I'm not having it. That's all I'm saying. But yeah, I don't think it's worth taking. I'm not going to take a position ahead of that because I don't want to be a hero. We all know that like Elon's fans are ravenous, and Tesla stands are especially cult-like in their love of him and the company. So they can buy up a stock ahead of an announcement, and I think that might be what's going on here. The other thing that's interesting about Tesla is it's really a stock that's going to move on the election. Democrats are more favorable for electric vehicle subsidies compared to Republicans. So even though Elon Musk, CEO of Tesla, is endorsing Donald Trump's administration would be extremely bad for Tesla. and I don't understand why the CEO would act against his shareholders like that. But here we are. But yeah, I'm not taking a position ahead of it. I do own Tesla in my retirement at a much lower price than where it's currently trading. And I'm annoyed because the stock is down almost 50% from its all-time high. It's unfortunate, but if you like the tech and you think their cars are still cool, it's a stock. Let's see, what else should we look at? Those are kind of the biggest. Those are some of the largest companies on earth that we just looked at. I don't know if Ubisoft even works on this stock chart. Let me see. Let's see if I can get Ubisoft to pull up here. Nope. UBSFY. Yeah, there it is. It was a bad quarter for Ubisoft. My God, this is a terrible chart. There's bad charts, and then there's whatever the hell this Ubisoft chart is. I just realized my camera is blocking. I'm going to put myself over here for now. But yeah, that's the worst chart. Why do I bring up Ubisoft? I don't know. I just think it's kind of interesting down here. It's okay if you don't zoom out. Okay, hold on a second. Let's see if Lucci's right. I'm going to try to zoom in. I don't know, man. That still looks bad. I don't know. Let's look at on the day. It still looks bad. What about on the 50? Oh, that looks bad. On the okay. 1 hour chart looks a little better. The daily chart looks bad. The weekly chart looks bad. The monthly chart looks bad. The quarterly chart looks bad. And the yearly chart looks bad. This is bad. I don't know. This is my professional opinion, you guys, but I think that Ubisoft might be in trouble. At some point, though, you really have to wonder, are they an acquisition target? Is Ubisoft intellectual property catalog worth acquiring to some other developer? Oh no, Lucci. I have 0 shares of this. I have never been a Ubisoft shareholder. I am a turd miner. I love when stocks look like this. Because then I dig in and I'm like, is it worth anything? It's my favorite question to ask. We're in this time period right now where these high-flying stocks like Apple, right? Or ARM Holdings or Google, right? Like all these darlings of Wall Street, right? All of them. Not Nintendo, Nvidia. You have all these gorgeous looking stock charts. And then there's just Ubisoft just sitting there in Turd Town. I can't help but be intrigued by this. I can't help but be intrigued. We're talking about a stock that was trading nearly $25 a share in 2018, and it's now at $2.22. So, if it doesn't go bankrupt, it by definition is closer to the bottom than it has been in years. The problem is, I have very little faith in the management over there. I don't think they treat their employees well. I think while they do have a decent portfolio of intellectual property, I think they treat their IP pretty poorly at times. But yeah, I can't help but look at this stock and find it interesting. I haven't bought it, but at some point I am looking at it from a speculative position, like a small position. Because it just seems like there are companies out there who can afford to acquire this, including Nintendo, which, my God, the internet would melt down if that happened. But, GameStop has enough cash on balance sheet where they could buy Ubisoft. I saw a lot of people talking about how GameStop's going to acquire Unity. They don't have enough money to do that. They do have enough money to buy Ubisoft, straight cash. And that, talk about monkey paw curling sort of moments. But yeah, I have to draw attention to this stock. I should probably add it. You know what I mean? I'm going to add it to my my symbol list. It's a momentous occasion when you add a stock to your watch list. That means I'm halfway there, Lucci. So those are the big techs. Let's look at some of the video game charts. Take Two. Where are you? Take Two. Here we go. Take Two with a potential reversal strat year cooking. Inside year, trading back within that range. We still have 3 months before this would mean anything. On the quarter, didn't really stay inside, just kind of drifting a little bit lower, but kind of hanging in there. The monthly chart, inside month. So it did have that sell-off on earnings only to come back, and then it traded inside month. I think it was this month that saw the sell-off, but so yeah, on the monthly chart, you would buy Take Two above 161.48 You would sell it below 147.23. I am short this stock. It is the only short stock I am short. I am losing money on it, but it is a hedge, and I keep it on just in case things get crazy. Because once correlation goes to 1, it doesn't really matter what stock you're short. It'll probably go down because markets move together. Let's talk about volatility. That was a crazy month. When the VIX shot up to 65.73. We traded inside of that range last month, which means we have a potential sell signal for the VIX below 1490 and a buy above 2376. That's on the monthly chart, so that would be for the month of October. This is a big ass outside quarter. So you had an inside quarter, followed by an outside quarter, followed by a monstrous outside quarter. Yeah, I don't know. You buy the VIX above 65.73 on the quarterly chart, and you sell it below that 1062 area. I doubt we see the VIX in the 10s again this year because we are in an election year. The weekly chart shows this crazy week that we had with the Japanese markets crashing. So yeah, VIX, something to watch, but not anything. Like obviously a breakout. If the VIX were to shoot above 65.73, everything would be crashing. So I don't know what would lead to that, but just something to watch. And then I guess let's look at the broader market while I have you here. S&P 500 did not stay inside month. It actually hit an all-time high last quarter. So yeah, this is a long-term chart of the S&P 500. Just like, I just want to show people, like, look at this. It's up 4 consecutive quarters in a row. There's no reason to sell it here. But I guess my point is, it seems like we're closer to the high than we are the bottom of these charts. I don't know what will signal that opportunity to sell. But I think that this chart has emboldened index investors in a big way. Because they're like, well, it's really easy. All they do is buy the S&P 500 and sit on it. It's like, yeah, that works. Over the long run, certainly it has. But I can't help but look at this and say, like, are all 500 of the stocks in the S&P really good? Or are there some bad stocks in that index? Just curious. Are they only good stocks? Probably, right? 500. So yeah. I don't know. What else do we have to look at here? Any questions or comments? Yeah, here's the financial sector is sitting here. Financial sector is inside year and up buy signal. So that's been active all year. So you can look for other opportunities to get into the financial sector. Although Warren Buffett has been dumping his banks like they are Apple stock. He sold his Wells Fargo position down. He sold, I think, all or most of his Bank of America. You barely understand anything. What Lucci, just say, what's something that you don't understand? Just pick one of the things I've talked about, and I can try to explain it to you. Because this stuff is confusing. I'm talking in technical analysis terms, and I'm also talking about fundamentals occasionally. But, yeah, I'm here to answer any questions. I'm going to put my camera back in the other part of the chart. That's tough, right? I'll see if anyone actually asked a question in the thread. Nope. Okay. T-Dang, I appreciate the question. That is a very good question. T-Dang 210 asks, what's a good buy right now for long hold and upswing? Yeah. I think Nvidia is a great stock, Lucci. I don't know about buying it here for the long term, but I do think it's an interesting stock. Yeah. Huh. That's a really good question, T-Dang. I'm not sure. Obviously, there's not a one size fits all answer to that question. I can just speak to my own investments that I own right now. And I wouldn't even say I would buy it here. Because, like I said, we don't know if what the Switch 2 looks like yet. But I think Nintendo is a really good long-term hold. I've held it for years. So yeah, here's basically the Pokemon Go spike, followed by the Switch spike, followed by the Switch era. And Nintendo is they're still selling Switches this year. It might go down as the best-selling console of all time. And they have these projects in the movie industry, with the Super Mario movie. They're making a Zelda movie. They continue to try to make mobile apps to varying degrees of success. I think if you had to buy a stock and hold it for the next 50 years or 20 years, I think Nintendo's interesting, but I wouldn't necessarily buy it here. Maybe you wait until it's at a discount. But yeah, it is a little bit of me talking my book, but why would I tell you to buy some stock I don't own? You know what I mean? I do own Nvidia in certain accounts. I just don't. To that question that they asked, for the long hold, I think you can buy Nintendo for the long run. They just celebrated their 135th anniversary as a company. I think it was last week. Yeah. Awesome. No, I appreciate the question too, and like I said, it's a nuanced question, and my answer would be different if share prices were in different places, right? And also just Neo, is Neo an EV company? Consumer cyclical? Yeah, they're yeah, I don't know, man. That's a scary. I don't know about that. And I know Russia hates Nintendo and Nintendo hates Russia. Neo's interesting. It's I wouldn't say it's a safe investment. They're based in China, which I don't really have. Yeah, they are. They do sue a lot of people. No, I know. It doesn't have to do with Russia. I did watch the Tetris movie. All I know is they really made it hard for Alexei Pajitnov to get out of Russia when he wanted to go sell Tetris to the world. That's an Apple movie, by the way. Anyway, Neo. That was a crazy ass movie. When they threw like a chase scene in there. There was no chase scene in real life, but they're like, we need a chase scene with holding out for a hero, but the crappy cover of it. Neo is a $13 billion market cap, and they have a decent amount of sales. They're not profitable. They have a decent amount of cash, but they also have debt on the balance sheet. I would avoid it, but like I admittedly will say that yeah, Lucci, there's a Tetris movie. It's really bad. It's so dumb. You should watch it if you ever have a chance, though. I'm curious what you would think of how they portrayed Russia. God damn, I love green tea. Seriously. It's not terrible. It's not like the worst movie, but we call it the Game Boy. It's so cheesy at times, man. They like walk into Mr. Nintendo, shows them the Game Boy for the first time. Yep. 7.4 on IMDb. Yeah. Look, Apple spends good money on their things that they release that no one watches. Yeah, I don't know. Any other? Yeah, so to answer your question on Neo, I don't really do a whole lot of work on Chinese stocks. I don't really trust their accounting standards, and I don't really think that Americans owning Chinese stocks, I don't think you're as protected as you could be. And now, if it's regulated by the SEC, you are, but like, Chinese accounting standards freak me out, and I can look at the numbers that are being reported, but if they're not true, it doesn't matter. But I do find that some of these EV companies are an interesting investment. Like, you can put together a basket of them. You know, Rivian's kind of trading in Turd Town too. Lucid's damn near dead. And Fisker's basically dead. So it's like, it's interesting when you look at like the haves and the have-nots of the electric vehicle space. Tesla's obviously the safest of them, but yeah, it's a tough time for that entire industry. And then you look at like Ford and GM, and they're also struggling. God, Ford's trading for $10. Let's see. Let's look at Ford real quick. Ford is trading for $0.25 of its sales. It's trading below book value, but that might mean that they're losing money. They're not yet. Not really heavily shorted. I find Ford to be kind of interesting. It's a hell of a brand, and the F-150 is pretty huge. Okay, explaining candles. Good question. Thank you for the question. Okay, so we use bar chart analysis, and basically each bar is created by 4 different price points. There's the price at which the stock opened, which was like, I don't know, on this day. Sorry, let's do daily chart. So on this day, Nintendo opened at $13.44 a share. That's this top point of the bar. That was also the high of the day. So the high of the day can sometimes be this line, but in this case, the stock opened at the high and then basically sold off all day and then recovered a little bit. So the low of the day is the bottom wick. That's $13.28. And then basically this is what happened intraday. You can look at it on the 15-minute chart. This was the previous close. This is where the stock opened. This was the around the low of the day, and then this is where it closed. So it closed at 1332. That would be this line right here. Does that, so that's just how, that's literally just explaining what a bar is on the chart. Those four price data points are what inform that. So why I value that is my trading mentor, Rob Smith, who passed away last year, invented something called the strat. I don't know if he invented it or more he uncovered it, but he found that there are stocks don't trade in a series of flat lines. It's not, oh, there's support here, like horizontal support, right? Oh, there's support here. No. Stocks trade in a series of uptrends and downtrends. And I think Tesla's a really good example of this. Tesla's in a downtrend, but it might be breaking. And then different time frames. You can see these across different time frames. He called it the broadening formation. And using bar charts, you can, I just mentioned how a bunch of stocks had these outside quarters, right? So whenever there's an outside quarter, you can draw a downtrend and an uptrend. Because by breaking the equilibrium, it's supported that this is not just, oh, there's a flat support here and a flat support here. No. There's your uptrend, albeit slight, and there's your downtrend, which is definitely steeper. But that informs future price movements. The S&P 500 shows this a lot. So yeah, we can look at, God, this is shorter dated. Let's look at a shorter dated chart. Here you go. So you had a downtrend here, right? This downtrend was from these days. This is I'm looking at the weekly chart. So you had a downtrend because you had, slightly lower low. And then it ran all the way up here only to come right back down here. Which if you draw this trend line across these two, why the hell does it land up so perfectly there? It's because people like to use, oh, this is my stop. Right, the low of May is my stop. Algorithms know that, and they'll sell you below your stop order, and that's what expands these triangles, or these downtrends. Once you understand that 90% of market trading is governed by computers, you can train yourself to look for what the computers are looking for. And that will inform future price action. It's not predicting it. It's just saying, here's a downtrend. It could go there. I don't know if I still have my Nintendo. Yeah, here it is. So, Nintendo has a couple. This is an interesting way to depict this. You'll buy my book. I don't have a book. But I appreciate it. So yeah, we can look at these bar charts to create a series of higher highs or a series of lower lows. And last year, Nintendo was in the situation where it tested the lower low downtrend and it bounced right off of an uptrend, tried it again, bounced right off of it, tried it again, and it's still not going down. If things got really ugly, the stock could get to like $8. It never happened, at least yet. But this is a good example of a long-term uptrend and a shorter-term downtrend within that uptrend and how they kind of resolve with each other. But you can see it. Bounced here, bounced here, bounced here, bounced here. A lot of people are like, oh, it's going to have support here, here, here. And it's like, no, you're in an uptrend. Detecting uptrends and detecting downtrends will help you determine price targets for your trades and also determine exits for when you know it's not working. Because if it broke down below this uptrend, I knew at least it was going to test down here. It didn't. This proved to be a great buying opportunity. The stock was trading below $10 a share. It's currently at 13 right now. Earlier last year, I think it got even above 15 for a hot second, yeah. earlier this year, 1501, before they gave their sandbag guidance. So I think that explains why I look at the bar charts, Lucci. Hopefully that makes sense. I hope I explained it to you in Fortnite terms. Battle Bus, Tilted Towers, Skibbity. did that work? Anything else? What else could I clarify at least? Because this strat has three things. You look for actionable signals based on equilibrium breaks. So an example of an equilibrium break is like Nintendo traded inside year and then down. So when it broke below 1059, it sold off. It lost another about $1 from there, but then it bounced back up. I have played Fortnite more than you have. I'm awesome. So yeah, there's the inside bar, which I just showed you on the yearly chart. That's a bar that's trading inside the previous bar's range. You can do this on any time frame. And the whole idea is you want to look for this concept of time frame continuity. You want to be short stocks that are going down on the year, on the quarter, on the month, on the week, on the day, on the minute. And you want to be long stocks that are going up on the minute, on the 5 minute, on the 15, on the hour, on the day, on the week, on the month, on the quarter, and on the year. It sounds so obvious, but finding time frame continuity is not that easy. But once you have that, you know that the computers are like, well, this is going up on all time frames. I'm going to buy. So that's another core part of it. So you look for actionable signals based on equilibrium breaks or stocks that aren't in equilibrium. You look for broadening formations based on those up and down trends. And then, yeah, you look for full time frame continuity. You look for you look for a stock that's not just going up on one time frame. You don't buy it. You should never use this strategy just on one time frame. You have to look at, you heard me earlier talking about confirming a yearly buy signal or using the quarterly chart as guidance for going into the end of the year, or even just paying attention to a chart that you see could be cooking a reversal, but won't actually confirm it until next year. So it helps you with the timing of purchases more than anything, or the timing of a short sale. But that's the strat. You'll notice, like, I don't use moving averages. I don't use a lot of those things because, in my opinion, they're backwards looking. So I don't recommend people doing that. So yeah, I'm gonna kind of shift gears here, because I hear this refrain a lot these days. That Joe Biden is responsible for all the inflation in the world. His administration is responsible for the inflation that we're seeing. And this is not me making a political statement at all. It's actually quite the opposite. Because I think you sound really stupid if you say that Joe Biden created this inflation. Because it's decades of monetary policy that led to this moment. So here's the Federal Reserve balance sheet over time. We're talking about, they had $900 billion on their balance sheet of assets in July of 2007, before the financial crisis. Mind you, George W. Bush was president. So under a Republican president, the Federal Reserve printed over $1 trillion in the fall of 2008. This was to bail out the banks. The troubled asset recovery program was announced, which ended up being pivoted into just buying stock in companies. But that happened during the Bush administration. Not a Democrat. Republican Treasury Secretary Hank Paulson. Republicans had Federal Reserve members that they had nominated. This was under the Ben Bernanke Federal Reserve. They printed over $1 trillion in the fall of 2008. Fine. Okay, Asif. It was an emergency. What were you supposed to do? Well, the next year, Barack Obama's president, and they keep printing money. In fact, his entire presidency, they printed about another $3 trillion. And then it flatlined for a while because they were trying to taper quantitative easing. This concept, what the Federal Reserve does is they print money and then they turn around and they loan that money to banks and the Treasury. So a lot of these holdings on the Federal Reserve balance sheet were Treasury bonds at 2 years specifically, like kind of the shorter end of the curve. And they would just let them roll over. So once they had stopped reinvesting in this time period in the later part of the second Obama administration. So you actually see money supply kind of dipped as the Trump administration kicks in because they were trying to taper. They had printed, it was like $4.5 trillion, and from that beginning, $3.5 or $3.7 trillion had been printed in about 10 years. So they were trying to taper it. They got it down by about $1 trillion. And then the pandemic hit. So like in the fall of 2019, the Federal Reserve was going to taper quantitative easing and they were going to begin tightening monetary policy because they had been accommodative for very long time. And the reason I'm talking about the balance sheet as opposed to interest rates is that they were at zero interest rate this entire time. So there was cheap money, but even that wasn't good enough to keep the system healthy. They had to print money and lend it to the government. So what happens in the year 2020? COVID breaks out, and they print another $3 trillion in like a month. Like 2 months. By the end of the pandemic, like when reopenings were beginning, the Federal Reserve was sitting with nearly $9 trillion of assets on their balance sheet, up almost tenfold from when George W. Bush was president. I guess my point is, the most amount of money ever printed in the history of the Federal Reserve occurred during the Trump administration. Right here. Now, is it his fault? You could argue one way or the other about that. But my point is that it's both parties. Both parties are to blame for inflation. Because I guess the question is, what were we supposed to do in the face of the COVID lockdown? The Federal Reserve opened all these monetary facilities. They kept a lot of businesses in business, kept a lot of banks going. But like, should we blame anyone for this? Or is it just the Federal Reserve to blame? But the idea that you can pin this on one administration is just foul. It's just stupid. There's also a lagging aspect to this stuff. So when you print those $3 trillion in 2020, guess what? It shows up in inflation 2, 3, 4 years later. Some of the decisions made in 2007 are still showing up. So it's just, I think it makes a lot of sense if you have a brain to consider that it's not one party or the other that is causing inflation. It's monetary policy. And look at the reasons for why they chose that monetary policy. Because my point is that the Federal Reserve and the Treasury did not have to save the banking system in 2008. They could have let them go under. But that was a Republican administration that decided to repurpose TARP, the Troubled Asset Recovery Program, into buying equity in banks. A set of Republicans did that. A bunch of former Goldman Sachs people did that. They gave Goldman Sachs a banking charter, a commercial banking charter, so that they would be eligible for this. Same with Morgan Stanley. And those are now two of the largest, strongest, biggest broker-dealers ever. And they were bailed out by printed money. So it's like when we're sitting here and we're all mad about inflation, just know who caused it. And really ask yourself, why is this country so quick to bail out corporations, but the minute an individual needs help, you gotta bootstrap your way to health, bootstrap your way to financial freedom, bootstrap your way to education. In a world where this government will print $8 trillion over a 17-year period, you can't pin it on one person. But this is a systemic problem, and they never got back to where they were before they opened the quantitative easing genie bottle. They can't put it back in now. You look at it, any other country, what has happened in Japan, what has happened over in, some of those banana republics to their currencies. I'm not saying it's happening here, but I'm saying that there's an effect to printing this much money, and we're seeing it, and it's adversely impacting people with less money. And that's messed up. So yeah, I don't know. Any other stocks you guys want me to look at before I get out of here? Yeah, Lucci. If you look at it over time, all of us have experienced inflation. It's very bad right now. But I also think like there are the lockdown itself created inflation. Because labor prices went up because people were like, I need to be paid more to execute this. Cost of living has gone up. That's why the Federal Reserve is, I think they're really in an interesting place because they're now loosening monetary policy as we still experience inflation. Yeah, I'm sure Russia is tied to energy prices as well. So it's like, it's in the best interest of the oligarchs who own the energy over there to have inflation, but it's not in the best interest of the people of Russia. And that's kind of like what I'm talking about here too. It's like, oh, well, we'll do what's good for the banks, but not for the people who are getting money from the banks. I point to 2008 when people talk about inflation. I'm like, that's where it started. We could have let Citigroup go under. You could have let all those banks go under, created a receivership, said, hey, do you have capital? Do you want to buy these assets and open a new bank? Come on down. That's what they did in the savings and loan crisis in the 90s. And I just think it's really important to note that, like, the idea that the Republicans aren't socialist is absurd. The Republicans kicked down the door for bailouts. They bailed out all the banks. But to be fair, Barack Obama, his administration, carried out the bailout of General Motors. So it's both. But yeah, I think it's 2008 was when they opened the bottle and the genie got out, and they are not able to get it back in the bottle. Because this is what happens with quantitative easing. I've never seen a country implement quantitative easing and then get rid of it. Because by the time you get to this point, it means that your interest rate policy doesn't work anymore. And that's troubling. But yeah, I don't know. I don't have anything else to say. I think that was a pretty good episode. Should we just watch some clips from some Zelda clips? You guys want to see some sweet Zelda clips? Do you want to hear about Balatro? Let me get you some Zelda clips here. There's a new Zelda game out, and they're doing silly things. Oh boy. I think this is gonna work. Anyway, there's some Zelda clip for you. Out of context, Echoes of Wisdom clips. There's a new Zelda game out. It's pretty fun. I gave it a 10 out of 10. It's you get to play as Zelda. You actually get to play as Zelda, Lucci. Yeah. It took them 35 years, but we finally get to play as Zelda. Pretty dope. But yeah, people are doing funny things with that game. But yeah, I think if I don't know, we talked about crappy stocks, talked about good stocks, we answered some questions. Shackers told me that they just would rather invest in index funds. Just like, it's pretty amusing. And yeah, more people infed my post than actually responded, so cool. It does finally match the title, dude. It really does. But yeah, I don't know. I don't really have any other things to do here. Like I said, we're going to be entering earnings season this month again. And on October 10th, there will be a Robotaxi event. So if you want to give us a follow here on Twitch, we'll be reacting to the Robotaxi event. And you can follow us on social media there. We're on YouTube here. And I think we even have, you can go to our website. So yeah, all these things above me, you can do all of them to help support us. And yeah, watch our videos. We did a bunch of content at Tokyo Game Show this weekend. And yeah, got reviews and previews and all sorts of stuff on the website. But that'll do it, unless anyone has anything else to say. Nope. Okay. That'll do it. Also, I watched Tulsa King last night, and it was great. And that's all I'll say about it. No spoilers. So thank you for watching. And as always, know your risk and manage it. Manage your risk, for the love of God. And do your own research. And quit thinking that you're not smart enough to learn how to do this. There's a ton of people out there who are willing to help you learn for free. And they're not trying to sell you something. There are people out there that are trying to sell you something. I'm not. But I will let you know what I'm doing. And I'm not doing a whole lot right now. I don't see many deals out in the market. So I'm not making too many crazy moves. I've raised cash in certain accounts. And yeah, that's... I'm not getting crazy with it, but like I'm not 100% cash. Sell me your book. Buy my book. Buy my book. I don't have a book, but if I did, I would sell it to you. But yeah, that's it. Thanks for watching, and I'll see you next time, which will be a month from now. Oh yeah, Shack Pets. You can play Shack Pets. Let's see, what will be a month from now? What about Notepad? I do have a Notepad. So yeah, oh no. The next episode is on Halloween. Shit. Okay, well, next episode will be October 31st, which is a Thursday. Yeah, we're going to have a Halloween episode. Maybe I'll dress up as Sonic the Hedgehog or something. But yeah, we'll have a Halloween episode. Good, because my Thursdays aren't busy enough. I think it's great that I'm going to have to do I'll have to let the Pop Goes the Culture dudes know. Because they're usually on Thursday. Maybe I'll go after them. But Thursdays are busy. We have a lot of people on Thursdays. Huh. That's a problem for future Asif. Not present day Asif. We'll let future Asif handle that. But yeah, thank you for watching. Squires, if you missed it, I'm going to upload this to YouTube so you can watch the VOD. At the very least, I'll embed it in the article later today. So thanks for watching, be it on YouTube or on, I don't know, do we even have our Twitch on there? I don't think so. Whatever. Wherever you watched it, thanks. And yeah, manage your risk.